Welcome to the My Money, My Lifestyle podcast, where we discuss all things money, because whether we or not we like it, money matters. A few weeks ago, I shared a podcast on cryptocurrency scams where we heard from a victim of one of these scams. But then many of you listeners have asked me that I follow up on legitimate ways to invest in cryptocurrencies, especially Bitcoin. I think blockchain technology specialist at Investig Private Bank, Chris Becker, is as legit as one can get. So I'm thrilled, Chris, to have you on the show and give some perspective on cryptocurrencies.
Thanks for having me on, Maya. I'm excited to talk to you and your listeners.
Yeah, so maybe just let's just start off with what you actually do at Investig, just so listeners understand what a blockchain technology specialist does.
Okay, so obviously the role as a blockchain technology specialist is quite a new one because blockchains aren't that old. The first blockchain was the Bitcoin blockchain. It was basically created 10 years ago. And there's a lot going on in the space. So really the role is around understanding blockchain technologies, the various applications, and also the new asset class that has been enabled and created by blockchain technologies. And these would be things that obviously people are investing and speculating in at the moment, and there's a lot of hype around that. My background is as an economist. So I worked as an economist for many years, a decade before that, before I sort of moved into the blockchain space back in 2017. And my interest in this technology and the asset class basically came from that background. I've always been very interested in the history of money, what money is, how the credit system works, what central banks are, what they do, how banks create credit, how money is created, how it's measured, the impact that it has in the economy, and all of these interesting things. And I was blown away when I understood how Bitcoin and blockchain technologies work. I think it could introduce a fundamental change to the way, the technique with which money is created on the internet and moved around the internet. So that's kind of the background. At the moment, been doing a lot of research and development, and also involved in product development for our clients, the various client segments of Investig Specialist Bank in South Africa, but then also participating with industry, other banks, and also regulatory stakeholders around various projects, projects like the South African Reserve Bank's Project Corker 1 and 2, and some digital identity initiatives leveraging blockchain technology. So it's quite a broad type of role, but very interesting and moving quite fast.
Yeah, I was thinking when you said, this is a really new role, they say that, if you've got a child at school today, they're going to be doing a job that doesn't exist in 10 years' time, or the job that they're going to do in 10 years' time doesn't currently exist. And I think that blockchain technologies has to be one of those that 10 years ago,
Yeah, I mean, 10, 20 years ago, who would have thought there'd be something like a web developer, and search engine optimization specialists and all these interesting things. And I think it's going to be the same with cryptocurrencies and blockchains.
I must say, I'm going to put a little link on the podcast for people to go to your blog on Investig Focus, because you wrote actually a really great piece about the history of money. And I found that so it really was interesting for me to see how one should view cryptocurrency within the history of money, and that money and the role of money in society and how it's used has always been evolving and changing. And this is possibly just another change to it. And I think that if you're interested, listeners, that I think just to give perspective, it was a really, really great article. But let's just start with, perhaps for the newbies, people 101, what is Bitcoin and why people are investing in it? In 2 minutes or less.
Bitcoin is it's a monetary technology, but it's also a monetary network. When you think about how one makes a payment today from one bank to another bank, the banks keep track inside their technology systems of a store of value, and the store of value in the South African context would be the rand. So the banks are licensed to keep track of who owns what rands. But in order to transfer the store of value from one bank to another bank, you need a type of intermediary, basically a payments company that sends a message between the different store of value ledgers in order to move the monetary unit. the traditional payments landscape kind of fits together like that. So the store of value unit is separate from the payments network and technology. So in other words, when you make an EFT using a different payments network to move the value from bank ledgers compared to when you're using Visa or MasterCard, or even if you're making an international payment, you're mostly using SWIFT. What Bitcoin is, its fundamental innovation is that it's a store of value unit. It's a currency that lives inside a monetary technology and network. So it's both of those combined. But probably the biggest innovation around it is that it's not issued by an intermediary. In other words, it's not a company that offers this as a software. If you think of any company like Google or Facebook or Instagram, whatever that might be, they've got technology systems that they offer to you, and they have ways of paying for the usage of, to monetize those technology systems. Bitcoin is an open source technology that contains the store of value and a monetary network in one. So it's decentralized. It's not created by any entity or intermediary. It's just open source software on the internet. And then lastly, I guess, this is why institutional investors are getting very interested in this asset in the current macro environment of negative interest rates and huge amounts of money creation by central banks, is that Bitcoin is the first digital asset ever invented that is scarce, completely scarce. No more than 21 million Bitcoins can ever be created. And if you think about digital assets that you own, which can be replicated an infinite number of times, the fact that Bitcoin can be scarce and is a money and a payments network in one is the innovation. That's what Bitcoin is at its core. And I think that's how, as people start to understand it, they're getting excited about the benefits that it could offer to society.
So, I mean, I think about that article you did on the story on the history of money, and of course the gold standard. So, there was once upon a time where money was actually based on gold, and gold has this natural scarcity to it because you have to dig it from the ground, and it will eventually be finished when we dig it all up. And it's almost, that's what Bitcoin has done. It's created that, but in a digital world. And of course, that's always been the criticism, isn't it, of moving away from the gold standard, is that where are we now? Well, governments are in debt all over around the world, and the way they're going to solve the problem, they're going to pay their debts, is just to print more money, and by printing more money, you devalue the money. So it is that kind of cycle. So I suppose it's almost, to me, is what's interesting, is that Bitcoin's come along at a time that we've now moved into the biggest expansion, I think, of monetary policy in history. I think even the First and Second World Wars, we didn't even go into this level of monetary expansion. So that it's quite an interesting, timiest thing, maybe.
It's unprecedented what's going on in the world of money and banking from that perspective. Historically, like you say, it's absolutely unprecedented. I mean, in 5,000 years of monetary history, there's never been negative interest rates recorded ever.
Yeah.
And that's why me as a macro guy and as an economist became excited about this technology and the other innovations around it too. So it's a technological revolution, I think, for money, and it takes time to play out. I think, when you study technological revolutions in other areas, things like electricity or the energy revolution around oil and the internal combustion engine, even the internet, it on average takes around 50 years for a technological revolution to fully play out and become diffused in society. We're only 10 years into this one. And so I think this still has several decades to go. And so for people who are kind of thinking that it's a short-term fad, I think, there will be some things that end up being worthless in the crypto asset landscape. But other things are going to they're going to transform the way that we do money and banking.
I suppose the thing with Bitcoin, this is where everyone's confused, is how do you value it? Gold, we have some idea, although to me, quite frankly, gold is still so sentiment driven. It's quite similar to Bitcoin in that sense. But, you have, I suppose there's a sense that we don't know the price we're supposed to be paying for it. And we have these massive rallies and collapses as a result of it. So how, as an individual investor, what do you think your approach should be in this incredibly volatile thing? Because it may not be worth what it is currently, or maybe it will be, but only in 20 years' time, or maybe it's undervalued. Honestly, there's not a single person I think who knows.
Yeah, I mean, Look, I can't give advice to any investors on this. I can kind of just give my
Opinion.
understanding and how I think about the space. And I think about it like this. It's like you say, we haven't really in history see a money being born out of nothing like this. It's a new technique for money. All the other forms of money that we're familiar with before they became money, something like gold or even silver, even the rand, which was linked to gold and silver because of the pound sterling, those commodities before they became currencies had some kind of industrial use case. So they had some kind of a market value pre-money that was established. Here you have something that's born and it has no other application or use other than being a store of value and a monetary unit. But here's the thing, it's a startup money. It's a startup monetary technology. And it would be similar to having a very early stage startup business, let's say, Facebook or Google, and it's very early days when it was still getting kind of angel and venture capital funding way before it listed on the stock exchange. Those equities would have been extremely volatile too. They would have been extremely volatile. So if you as a private equity investor in these early stage businesses were marking to market every split second, it would be hair raising. It would be intense.
Yeah.
But that's what's happening with Bitcoin and most of the other crypto assets that are all trading on highly liquid global crypto asset exchanges. And so it's a startup monetary technology. And so it's volatile at this stage. But when you start to dig into the different aspects that make this technology and this asset work, and once you kind of have the penny drops, the Bitcoin drops, you suddenly start to realize that this is bigger than just something that should be traded over short-term cycles. It's so that's kind of my perspective on it. You're investing in a startup monetary technology. Obviously, at this stage, it's still speculation. What's very important for people is to understand what it is that they own if they get involved in this. So you need to do your own research. If you were doing your own research back in 2014, 15, 16, there actually wasn't that much research out there to draw on. But what's great now is you have some really good thought leaders who are very smart, much smarter than I am, who can explain how it works very simply. And also the infrastructure is now there and the businesses are there that you can trust in order to get access to this asset, where you are less vulnerable to scams, which we've obviously also seen.
Oh, we've seen a lot of those. And so I wanted to just ask you, though, before maybe we go on to how one accesses it in a non-scam way, which is what everyone wants to know. Where do you think currently, I mean, given that it is a very new asset class in a sense, do you think that this, where does it fit in one's overall financial strategy? I know you can't give your advice, but, just if you had to give sort of some perspective on it, is this the kind of FOMO money, like I'm really worried I'm going to miss out, so let me at least have some of it? Or do you think it's now reached a point where it actually forms part of a diversified investment strategy?
Yeah, look, so there's always that element of FOMO that comes in. I'm not really seeing a lot of FOMO type of investment or money moving into the market. What I'm seeing at the moment is much larger institutional investors getting involved in the space and speaking publicly about the importance of having Bitcoin as part of a diversified portfolio. So, for example, the most recent investor that's come around to this view, who'd actually been providing quite a bit of resistance to Bitcoin as an asset, is Ray Dalio from Bridgewater Associates, which I believe is the biggest hedge fund in the world. Who I think just in the last week has come out and said that he believes Bitcoin does need to form part of a diversified portfolio. Now, what that diversified portfolio looks like and what the allocation towards it should be, obviously is going to vary depending on your mandate and your risk appetite and a whole bunch of things. But yeah, that's kind of what I'm seeing. So we're seeing very credible institutional investors understanding the asset, doing their homework and their research, and they're beginning to allocate towards this asset. I can't give any more sort of advice.
No, I think that's good.
It's definitely
I think that
more formalized.
It does feel to me that, and one of the things I'm picking up is those investors who are starting to see it not as a get rich quick scheme, which I think is of course how the scams are working. So a lot of people are getting caught up in the scams, but those who actually fundamentally understand why they're doing it seem to me just to kind of be doing that sort of rand cost averaging or Bitcoin cost averaging approach. They just set up a debit order every month. They buy some, maybe sometimes it's peaking, sometimes it's crashing, because really you don't know. But then the markets have been on a similar rock and roll road, and just slowly building up some exposure to Bitcoin over time. That seems to be a common approach for the individual.
And that sounds to me like a really good approach. I think that's kind of all I'll say is I think a sort of slow and steady building up a position to this, not putting more than you can afford to lose is important into the asset. And then once you have some skin in the game, you also pay more attention to the technology and how it works, and you get more interested, and you start to realize that there are far greater opportunities than just owning Bitcoin. But what I get extremely excited about is the possibilities of building new businesses leveraging this technology. If you think about somebody who's a software developer, but right now can't get a job, let's say at a bank or another type of financial institution. Despite the skills that you have and a product idea that you might have, you need to get a job at a financial institution in order to build a product that might benefit your community, no matter where you might live. You could live in a rural part of South Africa where a financial institution feels that, there's not too much benefit to them rolling out a product because it's expensive to roll out a product. But that person now can basically build a product or a service on top of the Bitcoin ledger, which offers value to his local community. And so what that means is open innovation is coming to the world of money and banking. And I think if you look at the rate at which the internet was able to innovate and offer value-added services to people, it's exponential. I think that is now coming to the world of money and banking and financial services. And I see actually most of those types of innovations and applications being built on top of the Ethereum blockchain.
I was going to say to you actually about Ethereum, because we talk about Bitcoin and everybody focuses on Bitcoin, but there are actually other cryptocurrencies, so to speak. Ethereum's maybe not so much, I don't think it's defined as a currency, it's more a technology. But maybe explain Ethereum and Ether and how that works, just to confuse our listeners more.
Okay. I want to make another point on the macro environment, which I think will be great perspective to people. But before, let me speak to Ethereum quickly. So one can think of Bitcoin as this digital technology that aims to create a scarce asset that mimics gold, so it becomes a digital gold. And if you think about, applications or hardware or devices that we'd use, if you think about a calculator, a normal old school traditional calculator that's got very basic code that allows you to do some sums on it. That's kind of what Bitcoin's like as a technology. Ethereum is more like a smartphone on top of which you can build applications. Ethereum's like an operating system for decentralized applications. And Ether is the currency for that platform. So if you want to execute transactions inside the Ethereum economy, so you want to use an application built by someone, you need to pay transaction fees in Ether in order to execute, a function, some kind of software to make that software work. And so that's kind of the difference between, say, something like Bitcoin. Bitcoin's this kind of dumb calculator just designed to be scarce asset, digital gold, whereas Ethereum is way more sophisticated in terms of what it can do. And so we're seeing an explosion of innovation happening on Ethereum. That's very exciting. So that's kind of at a very high level, that's the difference between the two.
And so what does an investor do, right? I'm talking now, a novice investor, somebody like myself starting to get into it. We know about Bitcoin. It's the one everybody knows about. Do you just buy Bitcoin? Because you can buy Ethereum. You can go onto the Luna platform, altcoins. They're available as well to purchase. How do you think people should look at it from an investment perspective? Or do you think just stick to Bitcoin for now? Like, what is your approach?
Look, I think what's important, and again, I can't I can't really give advice. I can't give advice on this. But I think what's important is that people understand that this is a generational change of monetary technology systems that's taking place here. It's not something that needs to be FOMO'd into. If you miss a big move here, you're not really going to miss out, because there's going to be so many opportunities that present over the next few decades around this technology. It doesn't only come down to owning Bitcoin or owning Ether or owning some cryptos. So I think that's the important point that I want to make. There are, depending on your skill set and depending on what you're interested in, there's a variety of businesses that can be built that leverage this. You can benefit on that side outside of having to actually own these assets, So that's what I'd say. But once you understand the technology and you're at the point where you want to build a business leveraging these technologies, you're also going to want to own these assets. The two kind of go together. And that's why it has this viral type of nature and network effect around this thing that it's creating, because people get really excited about the possibilities. So that's all I want to say before I get myself in trouble.
This is the problem for working with a bank. There's so many things you can't say. But, I want to ask you quickly, one of the questions, and I mean, do you think that the smart contracts that can be created using, using the sort of blockchain technology, when will it be applied to title deeds of homes? When will I not have to pay an attorney 80 grand to go and change my name at the deeds office? Because that's the business I want.
So it's going to be a big use case for this technology, I think, in the future. I obviously can't tell you when, but this is why I say it's going to be several decades, I think, before that actually is common and sort of standard practice. Because there's so much that needs to happen between reconciliating real world traditional assets to these digital assets. That's going to take time. So at the moment, most of the innovation around this technology we're seeing is all around digital native assets. And so something like a digital artwork, the JPEG that sold a couple of weeks ago for $69 million. I don't know if you followed that.
No, I didn't.
But there's an artist, a digital artist by the name of Beeple, is his kind of, what do you call it? It's his art name. And over the last 10 years, he created a digital artwork every single day. I think it was 5,000 artworks over the last 10 years. And those all got combined into a JPEG file, and it was auctioned at a Christie's online auction. So Christie's, the auction house, auctioned this JPEG file using the Ethereum blockchain, received payment in Ether, and this file sold for $69 million. So somebody out there paid $69 million in equivalent Ether, the cryptocurrency, to buy this JPEG file, and they now hold the title to the artwork. And they can now prove that they are the rightful owners of this digital artwork. And that's messed with people's heads, because they're like saying, I mean, how can a JPEG file sell for that kind of money? But it's fascinating around what's going on. It's being applied now to, content rights, title deed to artwork, all sorts of other digital assets. And so the innovations are happening there around digital native assets. And what I'm saying is it's going to take some time before all of the infrastructure and the trusted intermediaries are there to reconcile and audit and make sure that the real world asset that you say you own, that home, that title deed, is correctly represented on the blockchain. Because you don't want to end up with a scenario where, a title deed is now represented on two different blockchains, or twice on the same blockchain. And then who's going to intermediate and resolve conflict and disputes? So there's a lot that still needs to happen. And this is why I say, if you miss the boom in the price of Bitcoin, you haven't missed the boat yet, because there's still so much that needs to happen.
So much. It almost sounds to me like, when Twitter was created, if you look at what Jack Dorsey first saw, it would be used for. It's been used completely differently, and it's almost like that, isn't it? We just got this amazing technology that has endless possibilities, and we're just at the beginning of it. And now, we speak, obviously there's the cryptocurrency, Bitcoins and all of those sort of things, but we're now also moving into the whole world of ecosystem of crypto, which is now, we saw that absolutely, I mean, ridiculous listing of Coinbase. Was remarkable, which is a cryptocurrency platform. So even the things associated with it. Now, I must tell you, I am far from an expert. So I did a quick Google search on like other ways, other stocks that you can buy listed. So in other words, these are listed entities on the Johannesburg Stock Exchange, or not in this case, but on Nasdaq, or on an actual stock exchange platform that gives you access to these markets. And I came across Riot Blockchain, Hive Blockchain Technologies, Marathon Digital Holdings. How does one navigate this? I mean, does one invest in something like Coinbase, or do you think you should just be sticking your money into the Bitcoins, the actual currencies? Like, how does one navigate this space? And I don't even know how you begin to value this.
So I think
stuff.
what people need to understand is you have the technology, like the Bitcoin blockchain or the Ethereum blockchain, which is a technology that has its own native asset. If that network gains in value, which typically comes from usage, the more users, the more people on the platform, the more applications built on there, the more the native asset of that network also rises in value. So there's a law around the value of networks known as Metcalfe's law, and some smart quants have kind of run the numbers and looked at the number of users to the Bitcoin network and how that's grown over time, and found that Metcalfe's law has been holding up with the price appreciation for something like Bitcoin. And what Metcalfe's law basically says is the value of any network is the square of the number of users on the platform. Okay, so there's a value to these networks. And if you think about network effects and technologies, is that they typically don't mean revert. It's really hard for Facebook's value just to go to naught, for the value to mean revert to nothing, because there's such a big network of users on it. So people need to have a view on the network that they want to be a part of and possibly invest in, and then their businesses that build applications leveraging these networks. And that's what something like Coinbase does. And that's what something like Riot Blockchain does. They're basically a Bitcoin mining business. And so you have different ways to get exposure to a network over and above just owning a piece of the network. And so it gets quite sophisticated. You need to do your homework. You need to do your research to sort of understand the different ways of how you would want to play and what your skills are and what you're comfortable with in order to get involved. But I guess it would be kind of similar. Like, I think blockchain technologies are today where the internet was in the early 1990s. It's very early days. There were several businesses that were built in the early 1990s that didn't stand the test of time, but the internet remains. And so you need to be able to make that distinction and really have a good understanding of companies before you start investing in them. But the internet's technologies, the internet of money, I think will remain. But there again, there's different technologies too. And so you need to know what you would want to be getting involved in.
I think that it's such a good analogy, that, because I mean, I was actually working in stockbroking at the end of the 90s, and my goodness me, everything was listing. Anything that had the word internet vaguely related. I mean, Webcam, was it Africam or something? It was a webcam that looked over a water hole in the Kruger or something. That was listed. Everything was listed, and a lot of it was a load of and and I think you're exactly that. You look and you've got to say, well, hold on a second, you've got to do your homework. You can't just, not everything rises. Everything goes up the rising tide, but then when the tide goes down, what's left? Very, very good.
And
advice.
another important thing, I think it's a great point, Brian. I think another important thing for people to understand is, so you have a business like Coinbase that's listing on a traditional equity exchange, the Nasdaq, and you cannot own that business through your traditional trusted types of intermediaries. And you'll have a stock certificate and custodians and all this infrastructure around it. But the other interesting innovation is, you'll often hear the number that there are thousands of cryptocurrencies. What's important to know is it's not actually thousands of cryptocurrencies that are in existence. Ethereum as a platform, to mention one, makes it easy for a business, like a digital business, a crypto native business, to issue a token, the holders of which have some kind of ownership in the protocol, in the business. So a lot of these tokens, or what people would refer to as cryptocurrencies, aren't cryptocurrencies at all. They're actually some kind of a project that's trying to bootstrap network effects and give give people who participate in the network some kind of ownership rights and the ability to govern the network back. So that's, I think, an important nuance to understand. And it's in a lot of those types of tokens where I also see scams. And I see, these people sitting at home thinking, oh, this would be a great idea. Let me slap on a bunch of jargon because there's a lot of hype around this word, this buzzword, and I stick it on there. And, the buzzword in the Ethereum space, especially right now, is decentralized finance, or DeFi. And it's grown exponentially. Like, it's the value of assets in the DeFi ecosystem is up 300% from January, and it's grown several thousand, I think 6,000% year on year. And so what we're seeing now is guys just spinning up projects, launching a token, putting buzzwords on it, and basically suckering people who aren't quite familiar with the space and don't understand what the red flags are, taking their money and then disappearing with it.
Oh, I've seen so many of those. I mean, I think I can't remember the name of the one in South Africa, but somebody did start one at something sort of a P or something. Anyway, but they are, and it's like, oh, it's a token and we'll create it, and then this and the other, and people again are just fall for it. And I think I think what concerns me is that people hear crypto, they think I'll double my money, and they don't think further. And you've got to enter into this with understanding. And I think probably for me, just entry point, buy some Bitcoin if that's really what you want to do. It's probably the simplest, like you said, the basic calculator. It's probably the simplest thing to understand. You can pick it up on local platforms like Luno or Altcoin or whatever. I know at some point you can go and create your own private wallets. But just before we end off, I wanted to ask you, what is actually Investig doing in this space? Because that's what you are going to be involved in.
I'm gonna answer that. But before I answer that, I want to say, people can keep an eye on what some of the big names globally are doing. So businesses like Visa, MasterCard, PayPal, Venmo have recently enabled cryptocurrencies. Who else? There's several. Tesla's accepting payments for Tesla vehicles in Bitcoin. MicroStrategy's got Bitcoin on their balance sheet. Pay attention to what those businesses consider to be reliable assets. I'd say for somebody new to this, look at what those smart people are doing. I'm not saying they're always going to be right, but if you're trying to decide between something that seems too good to be true and just boring old Bitcoin, try and get a sense of what the big names are doing, because it can also tell you about the value of that network and how it might grow over time. Visa is now turning on Bitcoin at all its merchants worldwide. It tells you something about the scale of how that network could grow for Bitcoin acceptance. Understanding who to trust in this asset class, and if somebody wants to buy Bitcoin, let's say, and you need to decide which intermediary to trust. So if you need to go to an exchange in order to transfer rands to be able to buy some Bitcoins, it's important to see, you can take a look at who do those businesses have partnerships with in local industry. Are they credible businesses that they partner with and building products alongside in order to offer benefits to customers? Are there maybe some reputable international companies? But I think another important thing to focus on is to say, who are the investors in the business? And I think that quickly starts to separate the wheat from the chaff in terms of understanding who you're dealing with.
And I think also having deep pockets, because this technology needs a lot of you do need spending a lot of money on your protection and all of those things, and your double verifications and all that stuff. So I think for me, a lot of it is about, do they have the funds to keep that business going? Yeah. So you don't want to discover one day it's all. Yeah.
And ultimately, when you think about a regulatory environment, you think about trust. Can I trust? Are the regulators trustworthy and credible? And so as a result of that, can I trust the businesses that they regulate? If I put my money in somewhere, that's kind of all that you're looking for when you're looking for an FSP license. Are they regulated? Can I trust these guys? And so in an area where there isn't that much regulation yet, you need to understand, who are the jockeys and can I trust them? Do they have a track record? How do they make their money? You need to start answering that questions. And then I think you can quickly start to see who's who in this zoo.
Yeah, that's a good point.
At Investig, we've spent the last almost 4 years now researching blockchain technologies, understanding our client needs, understanding industry needs. And what we basically discovered was connecting to a new monetary technology like blockchain, whether it be a stable coin or a CBDC, central bank digital currency. So if we had to get a ZAR stable coin, let's say, issued on a blockchain technology, or if anybody wants to connect to the Bitcoin blockchain in order to, access and transfer value in Bitcoin, what is standard across all of these technologies is the need to be able to connect to the technology. And the way that you connect to that is through a wallet. And so what we've identified as an important requirement in order to be an innovator in the space and to be able to move forward and to offer services to no matter what type of client segment, you need to have a safe wallet. So we've moved forward with building digital asset custody. It's asset agnostic, but we're currently testing that with the regulators. The Intergovernmental FinTech Working Group was established in 2016, where they've created an environment known as the regulatory sandbox that gives businesses like us and other startup businesses, where they want to launch products or services where they're regulatory gray areas, basically the ability to launch these products and to work with them in order to take it to market, to understand the cost benefits, to understand the risks, all these sorts of things. So that's what we've done. We're very excited about that. I think it opens up a host of opportunities for us. And yeah.
Well, I'm waiting for the day that we can remove all exchange control will never go, but I'm talking about cross currency. The ridiculous amount of forex fees that I have to pay every time I want to make a payment overseas. The friction there, it's just crazy. So I'm looking forward to the day that I can just do a lot of that without having to pay. But maybe that's not so good for a bank.
Hey, look, no, it doesn't matter who likes it or not. I think that's where the world is going. It's moving towards less friction in moving value around the world. And that's obviously I think it'll be a net benefit to society. So it's exciting.
Exciting, great. Well, Chris, I want to thank you because you've been absolutely fantastic. And I think you've really explained it in a way that is really accessible. And if any of my listeners want to follow you, you're on Twitter on Chris L. Becker. But I'm also going to post up the link to your articles, which I found really, really useful as well. So thank you for coming on.
Thanks. It was great talking to you, Maya.
Right, thanks.